Hey, YouTube family, bulls and bears, what is going on? Another recording today. We had a pretty wild day in the markets. As we see a lot of action in the markets, those are the times when I'm going to put out more videos. And I just put out a video this morning. And in that video, I had stated, well, the markets recovered a bit. At the time of that recording, the markets did jump up a little bit. We're talking about the stock market. Let's take a look at some charts. But the markets took a huge dump at later in the day as the day progressed, and this capped off a really bad week. For example, this was the worst week for the Nasdaq since 2010, so the worst week in 12 years, and we haven't even raised interest rates yet. Is this all based on the rumor or the assumption that there's actually going to be higher interest rates? Let's go ahead and take a look at the markets here. And the Nasdaq we see down 2.7%, Russell 2000 1.78%, S&P down 1.9, Dow Jones down 1.3%. Also, cryptos today absolutely crushed. I saw a lot of cryptos I looked at. Some of them were down as much as 30 or 40%. An insane sell-off. So does this mean that cryptos will not be a safe haven when markets drop? Well, if today is an indicator of what's to happen if markets drop in the future, the answer is no, but we'll have to keep an eye on it. Maybe cash will be the only safe haven when interest rates rise, if they rise. That's why it's good to have cash. That's why you got to be balanced, like we've been saying on this channel for years. If you're all in on these markets and you see a correction, look out below, because you're going to be in pretty stressful mode when you have no money to invest when everything drops and goes on sale. Now, I'm not saying this is going to continue to drop. The plunge protection team, they could come in tomorrow. They could bring these markets back up. But is something happening? Why did the plunge protection team allow this drop today? Well, anybody's guess. But let's take a look at a couple other assets here. Oil still holding over $86. Gold and silver both down today. Not by very much. 1.5% drop in silver. 1/3 of 1% drop in the price of gold. Bitcoin down over $4,000. That's over a 10% drop in Bitcoin. And as I said, some of these other coins were down 20, 30, 40% as I look through like the top 20 or 30 market cap coins. But here's something else to keep an eye on. The 10-year bond dropped. So it looks like the money creators may be coming in trying to rescue, at least rescue some of the carnage and rescue the housing market. Now let's look at the Dow Jones right here. And earlier today, as the market opened, I put out this video, and the market did make a bit of a recovery after the initial opening drop there. And since then, it tanked. But let's go out to 1 month, and we see now that we peaked out at about 36,940, so just under 37,000. Now we're down to 34,000, nearly a 3,000 point drop in the Dow Jones within the month. So place your bets. And I've always said that you really cannot predict a manipulated market. Please let me know down in the comments. Will markets continue to sell off because of the fear of rising interest rates, because of the fear of the ongoing health crisis or the worsening health crisis? Will corporate investors, will the plunge protection team come back in and push these markets again to all-time highs? Or is there something bigger on the horizon? And are the insiders getting out because maybe they know something that we don't know? Again, please let me know down in the comments what your theory is on that. Right, again, I'd like to mention that I don't have a crystal ball. I cannot tell you exactly what's going to happen because you can't predict the manipulation. Technically, they could click a button and bring this market back up to all-time highs tomorrow if they want to. So it's not as much as watching the underlying factors. Those really don't mean anything. Fundamentals are basically thrown out the window when you have just a click of a button type of buyers and sellers in the market. We know that's the money creators that really run things behind the scenes. And that's why you need to be diversified. Imagine being all in the markets, thinking markets are only going to go up, and then you see this type of sell-off. And I've always said, have some cash. That way, if a better buying opportunity comes up, you'll be able to buy some. Imagine being all in these markets and now you just see your wealth dropping and you have no cash on the side to buy at a better price. All right, now speaking of predicting the markets, I watched a video earlier after I put out my earlier video of a YouTuber who I like watching. Is pretty entertaining. But honestly, he's been predicting the housing market to crash since 2018. Every video, it's always, okay, the crash is coming next month, maybe in a few months. And he's been saying that for 4 years. The crazy part is he gets probably 10 times as many views as I do, but people like hopium. They like the thought of markets crashing because all the people that are priced out of the housing market can then maybe afford a home. So people tune in, and this guy gets tons of views predicting, crashing real estate, even though he's been wrong for 4 years. But people do like hopium. Again, I try to tell you what I see, not just what you want to hear, but honestly, what I think is going to happen. And based on what we saw today with the 10-year treasury yield, I think they're going to try to push these markets back up, including keeping interest rates artificially suppressed, including the mortgage rates. And there has not been any reduction in the Fed balance sheet. Let's go ahead and take a look at this next chart. Okay, Fed balance sheet right here, total assets, of course, the huge run up during the health crisis. Let's go to a maximum chart here. And you can see what we did here just in the past couple of years dwarfs what we did in the financial crisis. But there's still people out there saying that we're not in a financial crisis right now. I don't know how they can say that, but let's go to a 1-year chart. And you look to the far right here. This is updated as of January 19th. And as you can see, the Fed is still increasing their total assets. They're increasing their balance sheet. Does this look like a balance sheet reduction? Not only is it not a balance sheet reduction, it's not even a stabilization. They are still purchasing securities. So based on what we can see today with the balance sheet and what happened here with the 10-year treasury, which is going to actually help keep mortgage rates suppressed, based on what we can see today, not what we're guessing, but what we can see what's happened, it looks to me like the money creators are in some sort of damage control mode, or maybe a recovery mode. That's what it looks like today. It doesn't mean the markets are going to shoot back up tomorrow, but this is what we can see is what's happening. All right, now let's talk about balance. I'll tell you, at times like this, it feels really good to have money on the sidelines. It's a really tough time for a lot of people right now because it's very difficult to just sit there and watch your cash do nothing when prices are going up. People feel like they've missed out. They feel like they need to go ahead and spend the money because everything's going to be more expensive next week. And we talked about that in our last video, that people are running up record amounts of credit card debt. And I can see why some people do that, because they think that whatever it is they need to buy is going to be more expensive. Who knows? Maybe tomorrow it'll be more expensive. People are stocking up on food like never before. It's not just the supply chain shortage, it's the fear of further shortages that are creating more panic buying, right? So you have this double-edged sword type of thing where you have the shortages and the backups, delays, supply chain disruptions, combined with the fear of prices rising further. I know at least a couple people just in my circle of friends and family that went out and bought a car, even though car prices are up big time, because they were afraid they were going to be even more expensive if they waited. So what do? It's crazy times, people. So we're going to try to keep an eye on everything for you and try to help you make sense of everything that's happening. But for those of you that do have some cash that weren't all in the markets, I bet you feel pretty good right now because it looks like some buying opportunities might be ahead of us in the markets. The housing market, I still don't see a crash based on what we saw today. There's still some propping up being done when you look at the yields. And what's going to happen, they're going to push mortgage rates back down. Things could change tomorrow. Tomorrow's a new day, but this is what we see today. All right, so we're going to wrap this one up here, but one more article I wanted to bring to you. And this is another study that backs up what we've been saying here for years. Over half of Americans cannot cover a $1,000 emergency expense with savings. And this just again underpins the fact that most people rely on swiping plastic to maintain just the current standard of living. And over half of these Americans that can't afford a $1,000 expense without taking on debt or swiping a card, what are they going to do if prices continue to rise? So I hope these people are making money in the markets enough to offset how expensive everything is getting. But the fact that this many people can't afford even $1,000 emergency expense tells us that a lot of people are not making money in the markets. In fact, most people are not making enough money in the markets to offset the cost of living. But you have to look at all the spending as well. Now, in our last video, we talked about the record profits for casinos. And one of you down in the comments pointed out something that kind of makes sense. What he said is that people are not just going to casinos for the fun of it, just to blow money. People are looking at winning as a way to help themselves financially, as a way to maybe rescue their financial situation, which is kind of a desperate thing to do. If people are really going to casinos to try to strike it rich, it's kind of like playing the lottery, except you're going to lose a lot more than just buying a lottery ticket, at a casino typically. All right, now of course not always. There's card counters out there and people that are good at gambling. And bottom line is, typically if you don't quit while you're ahead, the house usually wins in the end. And it could be like that for the markets also, because basically they can see all your positions, they can see all your trades, and the top 10% that own nearly 90% of all stocks, if they all get together and say, hey, we're going to sell, then look out below, because the tiny people, the small investor, are likely to get crushed once they all decide to sell at the same time. So be careful out there. Keep stacking. Bye for now. Peace.